So Nvidia will be reporting results this week, and I thought we should take some time this weekend to look over it, since this company is obviously the largest company in the S&P 500 these days by a decent amount. And basically the premise of the rally is AI related. So it's Nvidia is the king of AI. So I mean, I was looking through the numbers, and some of these numbers, when you look at them, are sort of mind-blowing, and you don't really know how to think about it, to be quite honest. And when we look at the expectations just for this quarter, the company's expected to earn, $45.9 billion this quarter, and that's expected to grow to $52.7 billion next quarter. But we know that Nvidia has this pattern to how it reports and how it beats. And so I'm going to try to explain this the best that I can. So when we look at Nvidia, it tends to increase revenue every quarter by about $4 to $5 billion. And it's been doing that pretty consistently since the third quarter of 2023. Now this quarter, the revenue is only expected to increase by that $1.9 billion. And then in the fiscal third quarter, expected to increase by $6.8 billion. The other thing that we know about Nvidia is that it typically guide the street $4 to $5 billion higher than the previous quarter. So, for example, in the first quarter of 2025, it guided $5.6 billion higher than the previous quarter. Now, for this quarter, they only guided $2 billion higher than the previous quarter. So that was a smaller guide. And so when we think about Nvidia and what it really needs to do in order to really beat expectations this time around, the bar is quite astonishing when you really think about it, because the street's obviously expecting a $46 billion-ish number from them. But we know that typically the company tends to beat those expectations. And we also know that the company tends to report revenue that's about $4 billion higher than the previous quarter. So, I mean, for it to stay within the norms, we would expect Nvidia to report a quarter that shows about $48 to $49 billion in revenue, which seems normal. It falls within the bounds of what it's done in the past. And, you can't really say that it won't do that because it's done that for almost two years straight. And so, who are we to argue that will or won't? But that would certainly be within the norm. That would mean that it would need to report like a $50 billion quarter to really be a shocker in terms of outside of the norm. Additionally, what I found really interesting, I guess, if we were to add $4 to $5 billion on top of what it typically guides, that would suggest that we would be looking at guidance in the range of $50 billion. And so that's a little bit of a problem, right? Because we know the street's looking for $52.7 billion. So that would mean that if Nvidia stuck with its normal formula of guiding $4 to $5 billion higher than the previous quarter, we'd be somewhere around $50 billion. But if we assume that this quarter had been normal and we had done a normal $4 billion to $5 billion guide, that would have meant that this quarter we should have seen a guide to $48 billion, and we should really be looking at a $52 billion number. Fine, so there's a little bit of a makeup there. But what that means is that the company needs to actually report more. It needs to actually guide higher than what the market is looking for, because the market's already anticipating the company to report $52.7 billion. And so that means that when the company reports this week, it needs to give a guidance of about 52 to 53.5 billion. But for it to be an upside surprise, it probably means that it needs to report something like 54 to 55 billion, so that it's about $1 billion to $1.5 billion above what the street is already looking for. And try to follow me here with this logic, right? Because in the fourth quarter, it guided 38.2 billion. In the first quarter, it guided 43.86. That was 5.6 billion more than the fourth quarter. In the second quarter, they guided lower because they had the troubles with China. Now, the market, so for them to go back to their normal sort of statement, 49.9 billion, if we added 5 billion to it, would give us, 50 billion. But the market's already anticipating 52.7 billion. So that means that to beat this number, the company needs to guide somewhere probably to around 54 to 55 billion, so that it gets like a 54.5 billion at the midpoint, which would be about $1.5 billion more than what the street is looking for, which is probably about what it's going to take for them to surprise the market. And if they guide, 54 to 55 billion, that's going to be 10 billion more than what they guided in the previous quarter. And we know that historically they only guide 4 to 5 billion above the previous quarter. So that would mean that they would need to double their guidance growth rate sequentially. And that's a really big hurdle in one quarter to do. Now, I don't know that they can or can't do that, but I'm just stating, what the pattern has been, and based off of market expectations of where this number is, where this guidance is going to be, they have a very big, they're going to have to report a very big, not only beat, but a very big raise. And that is something that I don't know. I mean, I've never seen anything like that before. And so to opine on whether or not they can do that, I'm not really sure. But that's kind of what this is implying from looking at this, because we already know the market's pricing in a number of 52.7 billion. And we know that it's going to take a guidance better than that to really push the stock even higher. And that's how we're coming up with this $9 to $10 billion above this number right here. And so that's a really big hurdle. And when we look at the option positioning in this, we can see that, our big gamma levels around 180. We have our call wall at 185, and we have our support level or put wall at 170. The interesting thing about this is that the expected move in the stock is 6.3%, which means that the stock's expected to trade in a range between 167 and 189. The problem is, of course, is that we just said the put wall's at 170 as of today, and the call wall's at 185. So from that standpoint, the stock really probably doesn't, in other words, from that standpoint, the support and resistance levels are within the expected trading range, which means that, anything sort of in line is probably not going to be enough to propel the stock outside of that expected trading range. The other thing that I think is worth pointing out is that implied volatility right now is only around 62%. This number will continue to rise as we get closer to Wednesday. It probably comes in around somewhere around 100%. Now, the delta exposures are also very bullish from the standpoint of they're all up here above 175, and they're all kind of green. And when we look at the option pricing, when we look at the actual option chain for this week, and we look at a $180 call, that's $5.28. So that means that at $5.28, if you buy this call, it basically means the stock has to trade at 185.28 by Friday to start earning a profit. Now, as we go through the rest of this week, assuming the stock stays fairly flat and premium and IV rises, this premium will actually continue to rise. And so the hurdle for making this a profitable trade will become harder. But we just also mentioned that the call wall is at 185. And so, and the expected trading range is up to 189. So what this is implying is that if the stock reports numbers and is unable to get above 185, anyone that owns 180 calls or higher are going to start selling those calls because they're not going to be able to make a profit on them. And implied volatility declines, the premium values will begin to decline, those options will become worth a lot less, and those calls will start to be sold. and they'll likely be sold, and they'll probably trade down to the put wall around 170 unless the results are really bad and they miss expectations because they're just so astronomical. In that case, the stock would trade severely below 170. Again, the thing here is that the risk-reward profile seems to be that if you're betting on the upside, you need like this almost, you need almost like a performance that we've just never have seen before in a way, because I've never seen a company be able to deliver, a $10 billion guide higher than where it was in one quarter. I mean, I guess it's possible. The company's been doing stuff like this kind of in the $4 to $5 billion range. But I mean, even this, a $6.8 billion increase from one quarter to the next is huge. And even if this number comes in at $48 billion, a typical $4 billion, better, then you're still looking at, a $4 to $5 billion raise, which is what it historically does. But the problem is the street's already there. So that means that this number has to come in above $53 billion, and it probably has to be in that $54 to $55 billion range, which would mean that you're talking about a guide that's, probably about $9 to $10 billion higher than where it was last quarter. And that's a really big hurdle. Anyway, I hope you found this helpful. Please remember to subscribe to this channel, like this video, share it with your friends, and we'll see you again soon. Bye.